Let's start with that $20 billion takeover of Australia's second biggest energy retailer, Origin Energy.
Origin holders voting against a Brookfield-led takeover proposal.
It was supposed to be one of the biggest corporate takeovers in Australia this year.
It's definitely becoming a chess game here, right?
Two cashed-up North American private investment firms had their sights on buying one of Australia's biggest energy companies, Origin.
It was probably one of the more dramatic corporate dramas we've seen in Australia for many years, and who knows, maybe someone will make a movie out of it.
In terms of the significance of the takeover by Brookfield and EIG of Origin Energy, it is one of the biggest corporate activities in Australia for this year.
But after 13 months of negotiations and a shareholder vote 2 weeks ago, the $20 billion offer from Canada's Brookfield and the American EIG partners was looking doomed to fail.
And I feel we should be an Australian company, not foreign owned. And it's how often foreign companies pay their taxes in Australia? Very little.
We were very much for the deal. We thought that the valuation placed on the deal by Brookfield and EIG was a good premium for investors.
Origin is an energy retailer and generator. Its assets include Australia's biggest coal-fired power station, Eraring in New South Wales. James Hanna is the Deputy Head of Investments at Van Eck, which holds 5.3 million shares in Origin Energy, giving it a 0.3% stake in the company.
There was a very strong energy transition component to the takeover, with Brookfield looking to invest $20 to $30 billion into the energy transition and take it from 4 to 5 gigawatts up to around 14 gigawatts. So from anyone looking into the energy transition point of view, it was a very good deal.
But the deal was scuttled when the biggest shareholder, Australian Super, which owns a 17% stake in Origin Energy, voted against it.
And as a result, Origin will continue as an independent ASX-listed company.
Describing the offer as too low and wanting to keep the company in Australian hands.
It was close to the number that was required for it to become a private company. It was 69% as far as the votes, and they needed 75% for it to proceed.
Look, Australian Super have generally not flexed a lot of their investment power in the past.
The outcome of the vote means Origin will remain a publicly listed company. James Hanna says the pressure is now on for Australian Super to prove that killing the deal was the right call.
Is it a good deal for Australians in general? They represent so many Australians within the community. Is this deal not going ahead in the interest of every mum and dad on the East Coast who use electricity? I don't know.
Rachel Waterhouse of the Australian Shareholders Association represents retail investors.
The challenge is big super can have an impact on retail shareholders, and we're just not sure what the future looks like and what we might see next.
Australian Super declined 730's request for interview. In a statement, the super fund talked up Origin's ambition to lead the energy transition. It also said it's open to providing capital to help the energy giant achieve that goal. Tony Wood says that the takeover could be seen as a missed opportunity for Origin.
I think Brookfield could have brought a lot more flexibility and a lot more firepower into the investment side of the transition. As a private equity company, much more flexibility than a public company. And it was pretty obvious from Brookfield's reputation and experience overseas that they are pretty good at doing what they say. I guess arguably we'll never know whether the broader Australian economy and the Australian energy transition would have been better or worse with the Brookfield.
Tony Wood spent 14 years at Origin Energy, working in senior executive roles until 2008. He says Australian Super's intervention in the direction of Origin Energy is potentially a risky move for a pension fund.
It's unusual for a company like a superannuation fund to be taking positions in a broad corporate anyway. Normally, they're more likely to invest in something that looks more like an infrastructure asset company, like a company that manages gas pipelines or distribution systems where there's a regulated, low-risk, low-return business. Origin is not one of those.
Well, it's the obligation of all super trustees to ensure that they're making decisions in members' best financial interests.
Australian super funds manage $3.5 trillion of our retirement savings. Australian Super is the nation's biggest, with 3.2 million members and nearly $300 billion of funds under management.
It does look like there is a shift to encourage super funds to invest in the energy transition. I guess that what's important is that as they do that, member performance and the performance of the fund is maintained. And whatever the investments that super funds are making, it's really important that we maintain a clear benchmark for performance and consequences for funds if they don't meet those benchmarks.
Tony Wood says with so much cash at their disposal, super funds are set to play a big part in the nation's energy transition.
Look, I'm sure they've been running their calculators over the sector. I am sure that people will be reassessing their valuation of companies who might have exposure to the energy transition. And there are a lot of smaller companies, and they might find that they become more attractive to super funds if they can be convinced that Australian Super's decision was based upon a sensible readjustment of the valuation of those sort of companies. Long way to go yet on that story.